A few days ago, I came across a stock that has nearly 20% 5-year dividend CAGR, as well as a hefty 4.3% dividend yield. Normally, you don't get a high growth and a high yield in the same stock. So if you want to dive into that stock, as well as see how the market impacted the portfolio this week, stay tuned. Hey guys, Kevin Burgess back again with yet another video. This week we're going to look at a stock called Fidelity National Financial. I was doing some screening the other day and came across this stock. And I'll go through this screen with you, but it came back as nearly 20% dividend growth as well as a 4.3% yield. I thought, man, there's got to be something wrong with the company, right? But it's actually looking pretty intriguing to me. So I thought I would share it with you. And in addition to that, we're going to take a look at how the market impacted the portfolio this week. As you know, the market went up and then it came down a lot as well. So we'll see what the impact was, compare that to the S&P 500, and then we'll call it a day. So if this is the kind of content that you like, go ahead and give the thumbs up on this video. I would appreciate it a lot. It'll let people know that there's good content inside this video. And also, if you want to hear more of this kind of stuff from me, consider subscribing to the channel. I'd love to have you along for the journey. So with that, let's go ahead and get started. So I thought it might be helpful to show you how I came up with this particular stock. Many of you are familiar with fast graphs. I love this program. I think it's very good. It's very visual, and I'm a very visual person. But I basically went into their screening tool, and I set 4 criteria. That criteria is it must be in the United States, credit rating of investment grade or better. And what's the third one? The third one is dividend yield as at least 1%. And then historic, in the historic tab, I wanted to see a 5-year dividend CAGR at between the range of 5% and 20%. So I ran that particular query and came up with these results. So I sorted it by descending dividend CAGR and saw this Fidelity National Financial Inc. It's 19.68% 5-year historical CAGR and a 4.3% dividend yield. And I was like, wow, there's got to be something wrong. But, they're investment grade. I mean, they're BBB, so it can't be all bad. So I took a little time to research that. I want to walk through some of that with you here on this video. So the first place I go is Simply Safe Dividends. You'll see here that Fidelity National Financial is a 58. It's considered borderline safe. We'll get into that a little bit. But when you look at my portfolio, let me just pull that up. I'll just pull up the whole thing. My portfolio, and I'll sort it here by ascending. I've got one stock, which is Hess Midstream, and I've done a video on that, but it's a 40. But then you see my next one is at 61, 62, 64. So when I see Fidelity National Financial at a 58, it's really not that far into the borderline category. So it's near the top of the borderline category. And you'll see that they grew their dividend by 10% in November of 21. They have a 4.3% dividend yield. You can tell that they have had some spotty dividend performance in the past. Everybody remembers what happened in 2008, 9, and 10. Also in 2014, they dropped their dividend down. But since 2014, they have grown this dividend. So they have a 7-year dividend streak. I tend to look for companies with at least a 5-year dividend streak. You can see in the past, they've gone in 2019, they were at 31 cents a share. They went to 33 in 2020, and that was during COVID. Then in December of 2020, they went to 36 cents. Then they raised early in September of 2021 to 40 cents, and then in December raised again to 44 cents. They are at the bottom of their 52-week price range. But let's look at some of the metrics here. They've got an earnings payout ratio, which is down in the 20 to 28% range. They've got a free cash flow payout ratio down around 11%. You can see their earnings are dropping off in the next 12 months, so we'll take a look at that on the fast graphs. Their shares on here haven't moved much, but they have been buying back some shares, so I'm not sure why that's not reflected in this number, but they did report in their 10K that they had bought back some shares. And they have a return on invested capital at 24%. So I'm pretty stoked about that. It shows their net debt to capital at 0. I'll show you why that is here in a few minutes. And their interest coverage is very nice at 28 times operating earnings. So let's go into Seeking Alpha. You can see that over the last year, they have decreased by 9.47%. Even in the last 5 days, it's gone down 3.5%. In the last month, it has gone down 17%. So this stock has gone down significantly. Let's look at it on a year-to-date basis. Year-to-date, it's down by 20%. It made me wonder what's going on. So before we leave Seeking Alpha, let's take a look at the financials. I'll show you this net debt calculation. We'll go to the balance sheet here. You'll see that they have cash and cash equivalents at the end of December of 21 of about $3.9 billion. They have long-term debt of $3.1 billion. So their net debt is actually 0. They have more cash than they have long-term debt. So if they wanted to, they could pay their long-term debt off tomorrow. So let's move on to fast graphs, and this is the max chart here, but I'm going to scale this down to about 8 years. And I think this shows a really interesting picture that since 2019, this stock has traded well below what it has typically traded at. But their metrics are really good. But here's the main thing. I believe that what the market is focused on is that they are expecting to go down in earnings. And we all know why this is. I mean, the market is slowing down. The Fed is raising interest rates. With higher interest rates comes slower housing. And, you know, I did listen to their earnings call. One of the things they pointed out is their reliance on direct residential refinancings dropped from 28% in 2020 to 16% in 2021. So their earnings are going to drop. I mean, anytime the interest rates go up, the Fed gets involved, they slow down the amount of real estate transactions that there are. There is going to be an impact in slowing down the profitability of Fidelity National Financial. The question is, how much will it slow down? So that's why I'm looking at it for my portfolio. I'm not recommending it for anybody's portfolio. You need to do your own due diligence here. But I didn't want to come across this and not let you know about it so that you can do your own research regarding your portfolio. So then the question becomes, you know, what's the value of the company? And to be honest with you, I'm not really sure. It's difficult for me to measure the valuation for financial companies. This company also includes an insurance company, so they have assets under management. I'm not an expert in valuing these kind of companies. And when I look at Morningstar, this company does have a Q rating, so I'm not sure how well we can trust this. But at least it's not overpriced according to Morningstar. The last close was $41.89, and the fair value calculation done by Morningstar is $48. So that's about a 13% discount according to Morningstar. You know, how much you can trust that, I'm not really sure. So it seems to have a pretty decent valuation. It is trading well below what they have historically traded for. I think they've got a pretty decent balance sheet. They are going to see some troubles ahead, though, with the slowdown in the economy. There is risk here, but I think there could be some payoff in the end. Oh, and there's one other thing I want to point out. The company has decided, this is off of their website, they have decided to do a transaction where they're going to distribute 15% of the ownership of F&G. F&G is their insurance arm, and they're going to distribute 15% of that to F&F shareholders. When I saw this article, I began to wonder why they would do that. And it seems like what they're doing here is they're going to take this F&G insurance entity and actually make it a public company, giving 15% of it to the shareholders in order to unlock the valuation that comes from this F&G company. Evidently, it's very profitable and it continues to grow in profitability. So they're wanting to unlock that so that the valuation on their balance sheet can record that. And that makes really good sense to me. This is going to be a taxable event, a taxable dividend. This is not going to be a tax-free dividend. So you want to keep that in mind as you think about how to proceed here. So take a look at Fidelity National Financial. See if it's something that would fit into your portfolio. I'm seriously considering it for mine, and I wanted to pass it along to you just in case it's something that would fit for you as well. Let's move on then to the portfolio. I wanted to show you this before we get started. The S&P 500 index has corrected a bit, and it came back, and now it's correcting again. However, it's still a bit overpriced in general. That does not mean that every stock in the stock market is overpriced. It just means that in general, overall, the price appears to be a little higher than it has been historically. The S&P 500 for the 5-day period has dropped by 2.95%. And on a year-to-date basis, it is down 10.94%. And you can see that over the first 3 days of the week, it was just a steady climb, and it was really nice. Then it went way up, and then came down at a fast pace. So let's go ahead and then take a look at the portfolio. You can see that for the week, we are down $9,444. And just to put this in perspective, the market on Friday drove the portfolio down by $18,800. So we were up about, $9,400 coming into Friday, and then after Friday we were down $9,400. So that drove us down 1.1% for the week, but the S&P 500, as we saw in the earlier slide, was down about 2.8%. It was a pretty slow week. We had no dividends. I had no closed options positions, and I put no money into the account. So everything that you see here in terms of changing the account balance was related to market movement. On a year-to-date basis, you can see that year-to-date we have about $7,300 worth of dividends and options, and about $9,000 worth of market moves. So the market moves are about a 1.2% increase compared to the 10.9% decrease in the S&P 500. So guys, just on market change alone, that is a 12.1% improvement over the S&P 500. Very stoked about that. Not only that, but I'm also getting my dividends and I'm getting my options transactions. So if you look at the overall income here, you're looking at about 7,300 plus 9,100. So about 16.5 or so year to date off of this portfolio. So not so bad. I'm really pleased with where this is heading. So looking at the transactions for the week, you can see that I bought 100 shares of Verizon, and all of these transactions were on Friday when the market just fell like a brick. I bought 100 shares of Verizon, 20 shares of Prudential, and 50 shares of Main Street Capital. These are all in my yield portfolio. You can see that the cash available to invest now is $92. I pretty much put everything in that I had. The cash reserved for secured puts, I entered into another cash secured put on Verizon, and obviously that's a $50.50 put. We'll see how that turns out. I'm certainly happy buying some more Verizon at $50.50 if it does get down that low. In the growth portfolio, I had two purchases. I bought 50 shares of Best Buy and 25 shares of Microsoft. The cash left to invest here is $1,770. That's dropped dramatically as well since last week. So I've got some cash that I can put into the market next week if I really like this Fidelity National Financial. The cash actually comes from my tax return, which I was expecting to pay in and I actually got money back. So some would say it's a bad thing, but I think it's a good thing since I can invest it in the market. Let me know what you think. I want to hear your thoughts on Fidelity National Financial. So I'm actually very intrigued by this investment, but I want to hear your thoughts on it. So leave me your thoughts in the comments below. I'd love to hear from you. And that's it for this week's video. I'm going to get out of your hair. I hope you have a great week, and I will see you on the next video.